Hello guys, Mike here from the Bull Capital, and today we're gonna talk about trends. So we're gonna learn what a trend is. So actually, what is a trend? So when the price is moving in overall direction such as up or down, that is called a trend. Let me change the screen first. So by definition, a trend is a general direction in which price of a coin moves, okay? So trends can be upwards, bullish, and downwards, bearish, okay? Or sideways, flat. There is no specific timeline for a direction to be considered a trend. But overall, the longer the direction is sustained, the more qualified the trend becomes. Remember that it's very important. Same as levels, if you remember, okay? We have stronger level and weaker level. Same here, we're gonna have stronger trends and weaker trends. The easiest way to identify trends is by watching the raw price action of a coin. You can identify an uptrend when the asset price is consistently making higher highs and higher lows. Okay, so we have here an uptrend which the swings that it's making are higher highs and higher lows, okay? And it's formed an uptrend, okay? So now we know that the direction of the market it's on upward, okay? So each higher low swing, it's touching actually the uptrend, okay, the diagonal, which also acts as a support, and with each touch of the trend it's gonna have a bounce, okay? It's gonna have multiple bounces until sometime in future it's gonna be broken down and a downtrend it's gonna start, okay? So the market moves in trends, in uptrends and downtrends, and a trend it's formed by multiple swings, okay? So the trend also can be sideways or horizontal when the price oscillates between fixed level of support and resistance. So that's actually a pause in the market between trends, okay? So let's say we have an uptrend, then we have a pause in the market which is a flat or sideways trend, and after that it's gonna start a new trend. It can be an uptrend or a downtrend, okay? So trends of different nature can coexist together and do not have to contradict themselves. This means that it's possible to have trends between trends, and I'm gonna give you an example from the past lesson when we talk about levels. So we can have one level on higher time frame and multiple levels on lower time frames. Also here we can have one big trend on 1 day time frame, and we can have multiple trends on a lower time frame, okay? Trends within trends. So trends on longer time frame have had a long time to develop, same as levels, okay? That means that it will take a much more significant effort for them to change course than trends in a shorter time frame. So that means that the longer the trend is, the stronger it is, and the shorter it is, the weaker it is. Okay, so if we have a trend on a 5 minutes time frame, for example, it's not that strong. Okay, it's way too young, but they get developed in time. Okay, so the more trend it's staying valid over time, the stronger it gets. So this is an uptrend and this is a downtrend. Okay, on a downtrend we're gonna have lower highs and lower low swings. Okay, it's forming a downtrend, and the diagonal, it's also acting as a resistance, and with every lower high, okay, it's gonna have a rejection from this line, okay, from this downtrend. So these are trends. Okay, the trends gives us the direction of the market, if it moves up or down. And we can say also about sideways or horizontal moves, trends. Okay, it's a pause in the market and it can change direction of a trend. Okay, or can be a continuation of the uptrend, or can be a change in trend direction. So I'm gonna end this now. I hope that you got an idea about trends, and we're gonna talk in the next lesson about how to spot them, how to draw them on different time frames. So see you guys in the next lesson.